We have Warren Wood here, who is the Vice President of Regulatory and Legislative Affairs with Ameren Missouri. Earlier, we talked about proof of work, how that ties into energy. Warren Wood is now going to transition the conversation into these practical, real-world use cases. So with that, please give a warm welcome to Warren Wood.
Sure. You got it? Thank you, Dave. And thank you very much for inviting me to come and speak today. When I first came in, I kind of looked at the outlay of speakers, and I'm not a finance guy, I'm not an investor, I'm not a banker, and I'm like, I'm a little out of my water here. But one thing I can do is I know how to produce electricity. And something that everybody needs that wants to mine is electricity. And I'll talk more about that here in a minute, some of the opportunities it creates and some of the challenges it creates. But just real quick, the venue you're in is a fascinating place. It used to be an Ameren facility. You can still see the turbine cranes that are here. This is the turbine bridge crane that came across, worked on the boilers and turbines in this until it was closed in the 80s, and then I'm so thankful they made it into this cool venue. Well, I know I'm between you and lunch, so I'm not going to talk for a long time. I've heard it said it's better to leave your audience before your audience leaves you. And for those coming into the area, Ameren serves about 3 million Missourians with electricity on the east side of the state. We operate power plants, transmission, distribution, generation assets, valued at over $10 billion. There's a lot of infrastructure out there to provide all those customers with reliable and affordable power. So our Bitcoin mining, which was really a data center project experiment, started in 2021 as a relatively small proof of concept project. It was the first time we had ever done anything like this. I'll tell you some of what we were trying to accomplish, and I think it was a very successful project actually. But when it came in front of our regulatory organizations and the consumer advocates that participate in that process, we got nothing but beat up over it, and we pulled the plug on it later that same year. But we learned a lot, and I'll talk about why it's important. I'll bridge it over to the conversation of today and why it's an important conversation to be having. So why did we get into Bitcoin mining, or really running a data center, which was really the primary objective, but it also created Bitcoin? 3 key objectives. One, we needed to better understand how a data center operates and how it integrates its operation with our production of electricity. And can it ramp up? Can it ramp down? Can we turn a data center off during peak periods of demand and then use it for other purposes? And then also assess the opportunity to improve power plant efficiency and potentially reduce emissions by having data centers connected to our power system. And then finally, what can we do to use this to reduce cost of electricity for our customers? And so those were 3 lofty objectives. And actually, I think we achieved all 3 of them to some degree. But there was a lot of pushback from media coverage. In St. Louis wasn't kind. We had a lot of staff, regulatory office, different customer advocate groups that were not excited about us getting it. They saw it as a speculative thing. We were potentially spending customers' money without a good opportunity to help customers, and so they were very opposed to us doing anything in this area. And despite media coverage, I'll tell you 2 things we weren't in it to do, although these are the 2 that we kept hearing, was having an excuse to keep full coal-fired power plants running well beyond the end of their useful life. We had nothing to do with that. And to make money for ourselves on the backs of our customers. It had nothing to do with that. Okay, I go back to our first 3, which I'll talk about more here in a minute. So how do we see Bitcoin mining as a good thing for our customers? Well, to understand this, I need to talk a little bit about how the grid works and where this fits in then. So let's talk about our power plants first. We have large coal-fired power plants. We have a nuclear power plant. If it was clear, you could see the cloud maker over the hill here. We have natural gas combined cycle, natural gas peaking units. We have solar, we have wind, we have energy efficiency programs, all of that. So that's on our production side. On the demand side, we have industrial, commercial, residential customers, all with different demand patterns, some of them very sensitive to variations in weather, some of them very continuous, some of them very dependent if they're starting or stopping shifts of their production, whatever they're doing. And so electricity is not like water or natural gas. We can't do something like they might call line pack, where they put a lot of capability into the system from their production that customers aren't using it, and they can adjust to spikes that they know are coming. Electricity, we have to almost match it moment by moment, real time on our production versus their demand. So we don't have the big storage mechanisms, although we're looking at adding batteries in the future to help in that area. But we have to match almost real time. So you have all these variations in demand from customers, and we have these generation plants. We're trying to track it to keep it reliable so everybody's getting 60 cycles a second right at the voltage they're supposed to get it at. And reliable power, doing that well is how you end up getting reliable power. Now, the simplicity of the system I described a moment ago, let's add to this now. We have a lot of intermittent resources. We're adding a lot of wind, we're adding a lot of solar. And you might think, the sun comes up, solar's nice and continuous until the sun goes down. No, clouds go over. You look at the output from a solar project, it looks like somebody's suffering a heart attack. It's all over the place, okay? Wind also has a lot of variability. Actually, more comes in the one night than during the day. One of the reasons our Tomsaw pump storage facility is very beneficial. It's a great time to store power at a very low cost for customers when we really need it. But you throw the variability of these intermittent resources on top of the load variations or demand from customers, and you see that the system gets that much more difficult to manage moment by moment to meet our needs. So where we get to then is, as we retire units, baseload units I'll call them, coal units we retire is what we're seeing retired. We're starting to see that intermittency and that variation begin to eat down into our baseload. These are coal nuclear power plants that don't really like to get throttled. They don't like to go back down below kind of what they were designed to operate. It's inefficient. It actually drives up emissions. It drives up cost per megawatt hour to run those units, okay? So this is where we get to talk about the benefit of a data center and something that has a lot of demand on the system. So if we could do something and I was thinking about it, it's like, how do we go about revising demand on our system to reduce the inefficient cycling of plants? So we have this power, it's available at times. And I think if you want to put that back up, I'll show the little data center there. To do this effectively, we needed to understand how a data center can ramp up and down and seamlessly integrate with our power plant's operations, potentially with customers that are on our system. That was the first objective. How does the data center, can we ramp it up or down? What is its operational characteristics? This was a relatively small facility, but it worked. And then if we can adjust demand through a data center, how do we go about improving power plant efficiency and potentially reduce emissions? This was the second key objective. It impacted, for a practical case, imagine driving here. You're stopping, starting, passing, you're dealing with traffic. What's your fuel efficiency? What if you get out there and you go on cruise control and you're just smooth? Obviously, it's a much more efficient drive for your vehicle. The same situation on our power plants. So the final key objective was, how do we go about saving customers money through the use of the data center? And yes, improving the efficiency of the power plant has value, but it's this much value. There's this other big chunk of value, this opportunity out there. For years, and this is how it operates now, when we have capacity to generate electricity beyond demand of our customers, we often run the plants. Why would we do that? Because we take that power and we sell it into the market in what's called an off-system sale. And those off-system sales then, we get the money back from those, and we flow it through to our customers as a reduction in our fuel costs. Through the years, we have flowed billions of dollars to customers from off-system sales, okay? So the question then became, what if we could do something, because sometimes these off-system sales, the market isn't that attractive. What if we could do something to operate the power plants even during periods where the market isn't attractive, but find another good way to monetize the value of that electricity. A data center became a really great way to do this. Maybe the market's giving us $10 a megawatt hour for electricity sales. We go to this, we might find out we're getting really effectively 20 to 30 bucks more that we can return to customers. And it improves the efficiency of our plants, and it brings down some of the emissions on some of those key power plants. So this was a relatively small facility outside of one of our power plants. It didn't need to be outside of a power plant, by the way. Everybody thought because it was at the Sioux power plant, it had to be coal power. It's like, no, it had nothing to do with that. It just happened to be on our property. We didn't have to hire special people to watch it or whatever. And it was right there. See, it's a relatively simple facility. It ran for a couple of months. It was generating about 1 Bitcoin every 15 days, generated about 20 in total. Cost less than $1 million in, and net, it probably broke even or even made a little bit of money. But it had the opportunity to make quite a bit more if it had been there for a longer time period. But like I said, different organizations were opposed to it. We're like, we're not going to deal with all the flack on this. We learned what we needed to learn. The time may come back to do this again, but for now, we're like, now we're out of this for now. So, any questions on that before I talk about, this is mostly history. I want to talk about what's going on right now, because this is where I think it'll be more interesting to most of you, but I'm welcoming any questions on this part first.
Raise your hand if you have any questions. I can come with a mic. Maybe give them a minute.
Very good. Let's go to the next step then. So that's history. Let's talk about today. Our electric rates are 20 to 25% below national average, probably in the top 20th percentile of low rates in the country. We're very happy with that. It's a great economic development incentive advantage. We bring a lot of businesses here. We're receiving 3 to 5 applications for a data center or a crypto mining operation every week. 3 to 5 applications a week are coming in right now. The size is anywhere from 5 to 200 megawatts, okay? The big Hitachi transformer plant across the river for scale, that's a little more than 5 megawatts, okay? That's a big, big customer, 5 megawatts, okay? Unilever, I think Lori was telling me outside town, about a 5 megawatt customer. So the small end of these are among our biggest customers. The large end of these take as much power as a city, okay? We're talking a lot of power, a tremendous amount of power. And we're seeing, and I guess we have there's some good opportunities here because we're seeing reshoring of industry back to the United States in this area, great workforce, good, there's a lot of things going toward bringing industry to this area. We're seeing electrification, I saw some electric vehicles out there, we're seeing more and more of that. Everybody needs to charge those at night in their garage, okay? Not on top of our peak, if you could please try not to do that, okay? And we're seeing data centers, a whole bunch of data center applications coming into the area. So that's good. We want to see that economic growth. I will tell you right now, with some of the policies we're dealing with from other, there's national level and local, we're seeing our overall capacity level electricity being challenged. And we're building intermittent resources. There's a lot of good funds out there under the IRA and investment tax credits, production tax credits. You're seeing solar and wind. It's a great low-cost source of energy for our customers. But we need capacity during severe hot or cold weather, during times when we don't have wind and solar providing that electricity, which happens a fair amount of the time. And it's a challenge. And so if we have customers coming, our winter peak, we're just about right at it. We're really close on the margin during a cold winter day right now. Because we can't use natural gas to generate electricity, we've got to use it to keep everybody heated. And you can't hardly get the gas during a peak cold period, so you can't rely on your gas generators, which creates challenges. So we have, like I said, we have the applications. You put these together, and if you just add all this load onto our system, our supply resource people are looking at us going, what are we going to do there? Because we have real challenges. We have an integrated resource plan in front of the Missouri Public Service Commission right now to add significant amounts of gas for our generation. But the timeline to get those permitted, the timeline to get a generator actually ordered and here on site for building a plant, transformers, wires, poles, all that, there's a lot of delays in the supply chain to get that stuff here as fast as we want it. So there's probably some of the folks in here who have filed applications are like, you guys are really dragging your feet. I can assure you we're not dragging our feet. We're dealing with some real supply challenges in some big areas. Transformers, for instance, we're having to stockpile the ones we get. We're begging plants to go into additional production over to get more of them. We're working to keep up as fast as we can. And it's good that we see the demand in the electric, but the challenge is we got to build up to meet these needs. One big opportunity then I asked the group here to think about, can a data center, mining Bitcoin, doing gene sequencing, anything like that, does it have to operate continuously? Can it operate profitably 70, 80, 90% of the time? Can it ramp up and down in a minute, 2 minutes with some notice? Because if it can, there's a much better ability to integrate into the grid and really operate efficiently, and a much better opportunity for us to provide an even lower electric rate, something that's really competitive. Because right now, if it's just thrown on top of the curve, even during the peak periods, then we got to build new power plants to make it serve, and that shows up in the cost. If we can do it to fill in some of those valleys between the peaks of demand, there's a much better opportunity to make it a good integration to the grid, keep it really competitive on the price, and really be a benefit to everybody receiving power off the grid. So that's the completion of my discussion. I welcome any questions. I do the public hearings for Ameren. We're talking about increasing electric rates. You can't say anything that'll offend me.
Well, great, Warren. I'll start. I have a question.
Okay.
Sorry, I'm Dave. Hi.
Hi, Dave.
So, are you saying that a Netflix data center is not the same thing as a Bitcoin mine, and why?
They are largely the same. I mean, in terms of a data center and the overall demand on the system, yes. If one can offer the ability to not take power during a peak period and take power between those peaks, basically fill in our valleys or the areas where we're not seeing a peak period, I think we need to look at policy in the state among the electric utilities that gives us a really clear guideline to drop the rate to really what it costs during those valleys. It's not a hard calculation, but it's a cheaper rate than just a flat service 24/7 rate. That makes sense?
Follow-up question, Warren.
Okay, go ahead.
What do you get blowback from regulatory and public for running or allowing Netflix data centers on your grid?
Oh, that's an excellent question. Okay, now I know where you're coming from. Okay. Funny enough, no. And I think when you look at, like H&R Block has a data center. Netflix, AMC Theaters, they have data centers, and none of them get the kind of abuse that these data centers get. And I'm not quite sure why that is. I think it became a talking point among some groups that it just becomes, these take a lot of electricity. So obviously the first thing that's going to happen when you put all these on the grid is all the utilities are going to keep all their coal-fired power plants up and running to serve these. So we shouldn't support these. It became a talking point among some groups I won't name, but it was very vocal and very aggressive in every meeting I went to. And it wasn't fair, to your point.
Not my words. Do we have a question over here?
So first of all, thank you, Warren. I was really excited to come here today when I knew you were going to be speaking, and I knew Ameren was going to have representation. So
okay,
thank you very much for your words, and thank you for what you shared. The question I have is, you actually asked the question for me.
Okay.
Can a Bitcoin mining unit or data center fluctuate with the demand at a moment's notice, moment by moment?
Yep.
And I think everybody in here will resoundly, who has any understanding of the mining operation, will say yes, it absolutely can.
Good.
In fact, I think it's designed to flatten the load curve that we see daily, quarterly, seasonally, or annually. Mm-hmm. And it's the perfect opportunity. And multiple times I've asked rural co-ops, contacts at Ameren, to understand where those potential capabilities are. So I guess more of a comment than a question, and an answer to your question is absolutely yes, this is there. I guess the real question is, how do we overcome the obstacle to answer the question that you just asked, when that's the same question we've been asking, or at least I feel like I have as a miner. I've been asking for a long period of time. where are those obstacles, who do we need to talk to, and how do we advance this proliferation of a data center that has 100 times more flexibility than a Netflix or an Amazon Web Service or AI, any of those that when they run, they want to stay running. Bitcoin miners aren't greedy. We want to serve the system, and that means we'll run when we can run, and we'll shut off when we have to shut off.
Excellent. Excellent question. Thank you for the view that that's there, and really kind of asking the next question, okay, if these data centers can ramp up and down with some notice and get a lower electric rate as a result, and if they're profitable at 70, 80, 90% operability, then the next thing for us to do is within Ameren, Missouri, and the Public Service Commission and the Office of Public Counsel and Consumers Coalition and all that, 20 other stakeholders, you have to, it would usually initiate with us doing like a cost of service study where we say, okay, well, if you're off these peaks, then you're not participating in an overloaded transmission system, distribution system, and peaking generation plants because you're not taking power during that time. And then those things drop out of the cost equation in calculating your cost per kilowatt hour. And so that comes across to us as a cost of service study. Thus far, it's hard to kind of justify if you've got a bunch of individual disparate customers, different groups. It's really hard to have a reliable communication operation. Say, hey, we're going to, now one thing you do is you have automatic like Nest thermostats, so we can send a signal and it kicks them off their air conditioner for a period of time. Those we can provide benefit for. But it's, in the total network system, it's a little piece of the whole demand on our system. If we're talking customers 10, 20, 200 megawatts that we can go and then put them back up, and there's that sort of interconnection, then there's really a good, strong argument that that's a powerful demand response opportunity for us to reduce cost for that group. And then so it starts with us with a cost of service study, putting it in an application for the Public Service Commission, typically with a rate review, and then it goes through that whole regulatory process for approval. But that's how you do it, and that's my task then leaving here, is to talk to our group that does that, which is right here. Okay, thank you.
Great question. We've got one over here from Mr. Marty Bent.
Warren, thank you. This is a great presentation. So we know down in Texas with ERCOT, I think a lot of the reason the demand response is blown up there is because the miners are able to plug into these APIs, these pricing signals, and use the miner firmware to do stuff automatically. I have operations in the TVA as well, and it's a bit more manual there. We literally get a phone call and they say, hey, you need to shut down between these particular hours. Like, what is needed on your side from like the software perspective to make this a more seamless process across the country and not just in ERCOT?
So you say ERCOT has something like this now where it's an automatic connection to do that?
Yeah, they're essentially using pricing signals and locking it up with the miner firmware. Once they hit a certain price, they automatically downrate their machines.
Okay. Well, the software, I mean, we have dispatching software. We work with a number of large industrial customers. That kind of stuff isn't that hard to put in place. Arriving at the rate and then knowing what sort of variation we can get on short notice with the customers is probably an individual thing that goes through a tariff that has an approved rate from the commission, and then we can put that out as something that, hey, if you can do this, then we can do these rates, and this is how we negotiate when you know when you come on and off. Yeah. And it's basically just a signal that goes out to people, and they know they need to do it with a certain period of time, or they'll be in violation of the tariff and they won't get the discount.
Yeah, because I think there's an opportunity to have this completely automated across all grids at scale.
Okay, good. I mean, the kind of megawatts we're talking, you could actually really have an effect on the system. So that's, it's hard to do with 100 kilowatts here, it just doesn't make a difference unless you have thousands of customers, which are hard to work with. You talk to 20, 30 data miners moving 1,000 megawatts on the system, it's an entirely different discussion. There was another hand back here.
Yeah, a few more hands back here.
Okay.
That's a good question, Marty.
So we see that the hash rate on the Bitcoin network is growing like crazy, and we are going into the halving in April. So there might be some volatility, there might be some carnage in the Bitcoin mining industry. Would that cause problems on your side, and are you looking ahead to that?
I mean, it broke up a little bit. I was trying to hear the question. Can you repeat it again?
Just talking about how the hash rate on the Bitcoin mining network is growing like crazy right now, and we are going into the halving in April of 2024. So there might be a lot of carnage, there might be a lot of volatility in the Bitcoin mining industry. Would that cause problems on your side, and are you looking ahead to that?
Yes, it does. I will tell you one of the concerns that electric utilities have, and I'm sure everyone, there's several in the room here, all of them have this concern is, okay, I have somebody that comes in, they filed the application, they've agreed to make the interconnect cost. On our end, then we look at upgrading a substation, we look at adding generation resources, 100 megawatts, part of a 500 megawatt combined cycle gas unit, and the local community's done its part to make all this work, and the mining operation comes in on 18-wheelers, they disconnect them, hook them all together, and put it to, now, this is I don't think I've actually seen that, but some people suggest it works that way. I don't know that it does. I've seen permanent buildings being built, but some people said they can just show up, do their thing, leave, and the utilities investing in this, supporting it, are concerned about the ability to just go pull up their roots and run. And then the money we've put on our side to make it work doesn't look like it's necessary anymore. And then we next rate case at the commission, we'd come back and go, well, we did all this for them, but they left, so now we need to put the cost on all the other customers. And we don't like doing that. So that is a concern. So the volatility, if it were to cause big problems and wipe it out or slow it down dramatically, it's a concern. Now, with that said, we look at electrification, we're looking at reshoring of industry. We see some other significant electric demand increases. So this isn't the only reason to go build that additional capacity, but losing that in a big way would slow down the interest in building this out in a big way.
I think I saw another hand over here, somebody. I see, thanks.
Hey Warren, Ryan Mertens, MTM Analytics.
Hello, how are you doing?
Good man, we've met a couple times. Got a couple questions for you. So we're one of your customers currently at a 5 meg load, right? As you know. We've always had great meetings with you, and we've always felt like you've wanted us here. You wanted the power because you sell power, right? That's what you do. We haven't seen the trickle down yet to any of your team. We've had a lot, the barrier for entry. I told you in your office, I said, I've never tried so hard to give a company my money in my life as I have Ameren. And we have 65 megawatts on 3 different projects in development here locally. And I was wondering if you guys worked that out with a team below you, who guys like MTM Analytics are dealing with on a weekly basis. And do they want us here yet? Because we've never felt like you guys have wanted us here. You have, of course, but the people that get the things done and get back to us in 2 weeks, we've always got the cold shoulder. And the other part of that question is, are you guys still offering an EDI, an economic development incentive, that's applicable to make you guys competitive from an energy rate for the rest of the country when the majority of bit mining is going on in Oklahoma and we're buying for $25, $35 a megawatt hour in Oklahoma, Texas. Are you guys going to try to get anywhere near that for us to actually come here to where it's feasible?
Okay. First question, are we interested? You have some interconnect here now. You've got some more you want pretty quickly, I understand. And it's my understanding that there's been some interest in knowing where we could put it, and we don't have capacity maps of where we have capacity everywhere. So tell us where you want it, and then we'll work on what capacity we have there. I know that is going slower than you want. It's going slower than probably all of us want. But we do have delays in the equipment and difficulty with the engineering timeframes that we want to get things done in too. So my apologies for that. I think we do continue to have an interest in supporting those projects, but the interconnection queue for large capacity projects is taking longer than we would like. So we have some challenges out there. The economic development incentive, when it was passed in Missouri law, it said that you basically look at our production power cost, and you would look at, we're going to offer somebody an incentive, an economic development incentive. And it's up to 20% off. So it was a significant discount over like 4 to 5 years, and I think we extended it a couple more years. But we had to show, and I think with a margin, Lori, is it 10, 20%? I'm trying to remember what it is. We have to show with a margin that that discount is not so low that it's actually less than our production of cost. Because if it is, then other customers begin to get a subsidy. And so with the electric markets where they are right now and where our production is cost relative to that, we're confident that if we offer an EDI to the kind of levels we've had it at, the commission will throw it out and take it away. We're like, we're not going to set up a deal with the fine print that says when this gets to the commission, if they don't like it, you're going to get it thrown out, and then you make all the investments based on an EDI only to have it taken away by the regulatory process and the next time we're in front of the commission. So no, right now we don't have EDIs. I think that's right, Lori, in general. Go 5 meg or lower, we don't, or up above that we do or don't. Below, so 5 meg or below is where we have it. And it's basically just a level of impact issue on the total cost, because we're confident right now with where the market prices are and where our production of electricity is, it's relatively low compared to the market, and we don't have the margin to give away on that EDI without it getting thrown out the next time we go to the commission. Your last question, Oklahoma, some other states where they're offering lower rates. I would like to see us get to a point where, you know, overall we're 20-25% below national Midwest averages. That's good. I think we could do better with data centers with a demand response capability to jump on and off of peaks. It doesn't exist today, but there's no reason it can't in the future.
Well, and I connected here. So I told you that when we first met, right? I'm a Jeff City boy, lived here whole life. I want to keep the money here. I want the development here. You know, you're at 100, so your best rate for Bitcoin miners is 11M. That's your best commercial rate. So at 100% load factor over the course of a year, your average price is 7.2 cents a kilowatt all in, 100% load factor. So that's not competitive with other markets, and businesses like myself or other people that are talking to you about 50 megs, 100 megs aren't going to pay you 7 cents when we can get it for everywhere else. But we want to grow here. We want to grow with Ameren. I mean, is there anything in the midterm that's you guys can do for that, or Public Utility Commission, right? We're a year out from having anything happen once you file, essentially. I mean, are we a year or two out on the horizon for you guys to be competitive?
Competitive in the perspective of the data center at the high load compared to another state. I mean, we're seeing a lot of economic development here, thank goodness, for the electric rates we have, but what you're asking for as an overall rate, you know, across the peak periods, that's the low rate we have right now, okay? To get the lower rates, you're going to have to go into something where you have some demand capability to jump off the peaks, which is what we had talked about earlier.
You have to file that with the Public Utility Commission, right? Public Service Commission, sorry.
Yes.
I think we would all be willing to do that. Obviously, we know you write into the hosting contract if you're a hoster, or you dial it back yourself. Is that still a year process because everything has to get approved? Or is that something that to keep businesses like mine alive that are currently pulling 5+ megs from your grid, is that something that we can do so when you guys do raise the rates or the EDI goes away that we don't have to shut the doors?
We don't get to charge a rate for anything. We're not allowed to provide any term of service or without Public Service Commission review and approval. Okay, that's you know, we're a regulated monopoly, and part of the deal is the Public Service Commission. You know, every tariff we have provides any service is outlined and approved by the commission. Okay, so to make the change, we need to go in front of them to do that, which is how we, you know, we'd have to put a cost of service study in front of them and show this is what we want to do, and then make that offer. Now, if we do that, something that would be helpful, something to think about staying in touch with this group is if we do it, people making letters, filings, whatever, to outline how it'd be beneficial to the state of Missouri, if they'd approve this, would be helpful to me over there.
Okay, thanks, Warren. Appreciate it, man. Like I said, you've always been great to work with, and I know other people want to grow in the area with you guys too, so I appreciate it.
Thank you. Do we know if anybody's proposing legislation this next session on this issue? I've seen nothing on it, but I wondered if somebody's looking at doing something. Okay. Well, we'll just see if anybody does know something, doesn't want to talk about it, please feel free to grab me after the discussion here.
Well, Warren, thank you for
Thank you.
withstanding the fire from the audience.
Thank you. Thank you. Really good.
All right, thank you to Warren.